Welcome, folks. Brandon Chapman with you today. It's another video from TheoTrade on Monday, April 10th, 2023. As for being a day where the market's closed, right? For much of the world, Europe's closed, for example. Different people celebrate their, Good Friday on Friday in the U.S. A lot of people celebrate on Monday, and so the closures are today. The S&P's basically unched on the session right now. We're about a few minutes left to close. We're flirting with just basically 0% gain or loss, recovering off the lows of the session. Just a very uneventful day on the surface. But man, when you start to look below the surface today at the unusual option activity that's going on and that's happening out there, it makes things a heck of a lot more interesting as things are shaping up. As earnings season is about to kick off this week, JP Morgan, for example, announcing on Thursday, or Friday, what is it? The 14th. Anyway, before the market opens. So a lot of stuff is about to kick off. And right now we're seeing S&P earnings for first quarter continuing to slide in terms of expectations. So we'll kind of preview that, as well as a number of different trades that are happening today in the option space that point to both bullish and bearish movement, depending on whether you're financially oriented, the financial sector, or you're in technology or materials, etc. So let's kind of get back here to the S&P 500. So I usually bring up the SPY. It's traded. You get a sense of what's happened during the cash session. You'll see we essentially open at the low of the session. We're closing near the high. I have this channel line drawn. So the idea is we kind of approach here looking for a short-term bounce and likely a retest of the high, for example, from February 2nd at around 418.31. So expect to see a little more of a bullish bias this week as we head into earnings. Now, obviously, banks like JP Morgan, the earnings situation's always really kind of unpredictable. For example, you look at the last earnings back here, you had the gap down, then you had the rally, essentially putting in the top. Sometimes you see an early rally as the early banks announce and then fade late as the other banks, investment banks, announce. You can look at, for example, Goldman Sachs, as we continue to see the picture kind of round out here by the 18th, which is next week. So maybe we see like an early rally and we start to fade as the reality starts to sink in, or maybe it's the opposite. One of the things we want to watch for from these companies are specifically banks like a JP Morgan, Bank of America, Wells Fargo, Citigroup, and those names. We want to see how much are they setting aside in loan loss reserves, or how much are they setting aside for potential defaults, right, on debt that the bank is holding on to. But today we're kind of shrugging it off. Financials itself, performing at about kind of the middle of the pack today, up 0.25%. We are seeing some rallies in bigger banks. And again, we are seeing that they are announcing this week and we could see some volatility. Now, what'll be interesting is, there's the bell. Anyway, what'll be interesting is, do we rally into it? And if we do, does that take away the potential upside? Meaning that if Wells Fargo continues to rally throughout the course of the week, we enter earnings, we get this nice move from like 36 to 40. Does this kind of skew the potential results, where if it's a surprise on the positive side, we start to see limited upside potential and open up the downside if there's a negative surprise? So again, with these strategically important banks, what's going to happen as we see things coming up here with earnings? Regional banks like US Bank is another example, a more lending focused institution. Well, they're announcing next week on the 19th. So do we see the early rally leading into, the bigger banks? And do we start to see things fade late as we see other banks announcing next week? So again, we're not trying to guess what's going to happen. It's more a matter of saying, okay, let's watch, let's see what they give us, and then make the decision. But as we look at some areas of the financial space, like an Ally, for example, you are seeing some negative activity we'll look at here shortly leading into the earnings. Now, let's kind of recap what's going on in terms of S&P 500 earnings expectations for the coming quarter. Now, with the S&P basically near multi-month highs and maybe en route to test those highs this week, we have to gain some perspective. the first quarter, so this last quarter wrapped up the end of March, S&P 500 earnings are expected to decline 7%. Okay? Now, that's the second quarter in a row of earnings declines after fourth quarter, back here as an example, declining 4.6%. This is the worst expectation in terms of earnings since the third quarter of 2020 when earnings declined 30%. So to put this in perspective, from a price level standpoint, we're at 41.37, which is basically near the highs of what we've experienced over the past year, and yet we're experiencing sequential expected declines in earnings after a poor fourth quarter. Now, first quarter this year, expected to decline upwards of 7% in terms of earnings. And when you start to strip out energy, which is a strong source of earnings, it starts to get even worse, maybe closer to 10%. I have the number right now in front of me. But anyway, in fourth quarter, so we're talking back here, right? Net profit margins declined 11.2%. Okay, so again, estimates for first quarter is down 10.4%. So we see decline in margin of fourth quarter of last year. We're seeing another sequential expected decline in margins of another 10% and another 7% in terms of earnings. The inflation monster is hurting earnings. It's hurting margins. And now all of a sudden, when you look at some of the anecdotal information out there since mid-March as this kind of liquidity crisis in the banking sector is starting to happen, are we starting to pull back on lending? And in the coming quarter, we're talking April forward, are we going to start to see a real contraction in spending as anecdotally evidenced in the last couple of weeks of March? Are we going to start to see some of those companies extrapolating late March into future quarters and see even further downgrades? So there's a lot of stuff on the table here. And depending on how companies report and the guidance those companies are providing could create a major shift in depending on where the market's going in a particular earnings guidance. Buybacks were down 20% in the fourth quarter of 22 compared to 2021. Is the source of cash, if margins are strained, if outlook is constrained, do we start to see a pullback in the buybacks, companies buying back their own stock, which does help create some support under the market? So there's a lot of stuff that we want to see, right? Indications of potential recession, by virtue of guidance. So as you see these companies announce, there are three things that you want to see if you're buying a stock. Number one, you got to see them beat. They got to beat earnings and revenues, right? Number two, we want to see them raise guidance, right? Raise the expectations of future earnings. And then number three, you generally want to see the stock price respond positively to that announcement. And again, realize that there are companies that will go up that don't beat, that may raise guidance, or companies that go up that actually beat but lower guidance. There's lots of different combinations that we can see here that may create, again, cause the stock price to go up. But the reality is, again, is you're trying to be discerning, recognizing you're not going to buy every stock out there that's doing well. You're trying to focus on a select set of criteria that may help you. Those are three things that you might watch for in this coming earnings season. And as always with banks, let's be honest, is there any way to really be able to analyze the fundamentals of banks? Utilities get thrown in that mix as well. The answer is no. So, the reality is a lot of this kind of resides with companies outside of the banking space, outside of utilities, in those 9 other sectors that are represented over here, for example. The top performer today of which is industrials. But anyways, we look at the sector performance, energy, real estate, materials, industrials kind of leading things out. Industrials did experience some more significant selling last week. I reviewed some bearish activity in industrials, for example, last week up here towards the high on the 3rd. And now all of a sudden we're coming off the lows. So if the market rallies, certainly it makes sense that some of the oversold parts of the market could react positively. Real estate, however, is not oversold, but it was positive today. But realize that there's areas within real estate that may be looking more negative. Materials, after a few-day pullback, catching a bid today and starting to bounce. So before we get into some of the areas of strength in the market and weakness, let's take a look at some of the other markets, and particularly in commodities. So for example, forward/GC, gold today was down Dollar likely weak. So if we look at UP, or dollar strong rather, you look at UP today, the dollar is stronger predominantly against the euro slash US dollar. As we're seeing the euro US dollar pull back, that generally leads to strength in UUP or dollar index because of 57% weighting to the euro. This may be relatively temporary. As again, if the market rallies, we're likely going to see a weaker dollar, which may provide an opportunity for gold off of this level to rally and retest highs. Now, along with that, there was some bullish activity today in a number of gold stocks and silver stocks. So, for example, B2 Gold. Now, this is one that there's been bullish option activity the last couple of weeks, something I've been profiling daily and following since the 27th of February back here as an example. But BTG more recently, the last couple of weeks, others, Kinross Gold, KGC, AGI, Barrick Gold, all these stocks have been experienced rather significant option activity, but BTG is one that really, when you start to back this out, a lot of the activity has been centered on, the end of summer, maybe by January next year. And when you look at BTG, it may have some volatility over the course of the next number of months. But if the Fed begins to cut rates, for example, and think about the rally in gold recently, just by increasing their balance sheet a little bit as a result of some of the banking issues. Well, all of a sudden, man, could we see a significant move here? So in BTG, if you're willing to hold it for a year, potentially weathering a retest of 3, you might have a possibility of getting to 750 up here. So again, the reward risk is favorable. So it's something that, again, you could start to nibble on and buy more if you see more of a correction. But in BTG today, it was the I gotta find this. The May $5 strike price up here. So again, if the Fed recognizing earnings weakness, the diminished outlook, and other things, do we start to see increasing odds of the Fed starting to cut in relation to the announcements that are coming in the coming weeks? Could this spur on a move to 5? And that's heading into the Fed statement in early May. So anyway, just something to watch there. BTG, SVM, right? This is one that Silver Core Metals was one that back here on the breakout in one of my sessions, we kind of walk through the opportunity. It was back on the 20th. Yeah, March 20th, right here on that breakout. It's had a lot of follow through since then. And the question is something that's already had a lot of movement. Can it have more? And today you have an October way out of the money 750. And again, the probabilities of getting here by October is pretty small. But what it is representative of is still sustained interest in these kind of companies. And this is more silver focused. But remember, all these companies have a exposure to all precious metals. Hecla Mining today as well. Again, already broke through resistance. We're retesting old resistance is now new support. And in Hecla Mining, it was a September $10 strike price. So again, as you go in and you look at this stuff, again, you can kind of see the activity out here at 10. This stuff isn't exactly hard to find. I walked through today in my session how to search, searching and identifying areas. I can come in here by industry, and I have a set of parameters that I use that I give out to our subscribers. But if you come in here to select all materials and you click scan, you'll see, Hecla, GFI, long put, kind of more of a straddle there, SVM, BTG. I didn't really look at Ego yet. That happened maybe a little bit later, 24,000 contracts as well. So it's not hard to find it, and you got to kind of review it. Cleveland Cliffs, this is an iron ore producer, right? This is a weekly option at the 18 strike as well. And again, you see the setup of coming off relatively oversold levels, catching a bid, finishing near the high and up nearly 4%. If we start to break resistance at 1850, then all of a sudden we're looking at what, 20, maybe 22 in the coming days to weeks. So again, if the dollar continues to pull back, look at the metals area, right? Mining area as opportunity. FCX, it's kind of a messy chart here, but we had a seed wave, a pullback, a run to the 138 level. We're seeing another kind of flag type formation right now in FCX. And on a break, you'd be looking at around the 223%. That's about $45. Well, guess what? Today there was an August 35 out there. August 35. It's a bit in the money here, but again, buying activity, and that was on my list because it's deeper in the money. It's had some movement today. But anyway, the idea is that we're seeing again interest coming into the mining space again, potential flag breakout. You might look for a trigger here off of yesterday's high or Friday's high at about 40 and a half. We start to break that. Maybe you're looking at a run to 43 to 44, $45 in this next swing. 1, 2, 3, 4, 5 wave pattern getting up there. So again, as we kind of look at, drill down energy, today, again, big breakout last week, consolidation this week. Again, or end of last week, looking for a breakout. And again, we're at the 61% retracement in XLE. Could we run back to prior highs? Well, today it was let me just flip this to energy. It was a lot of it was centered on gas, natural gas. So let's look at EQT here. EQT. Again, this has made a decent run already. We got resistance at $34.5, $35. But today, the trade in EQT, this was a roll from an April 34, and it's not hard to see. Just come down here to time and sales and make sure you kind of clear everything out. Let's focus on the call side. What you'll see is a roll from an April 34 out to a spread, buying the 35, selling the 38 for May. So what's happening here? Expectation is kind of this broaching this kind of resistance level back here. If we're to draw some fibs off of the downward trend, $38 is around the 1/3 retracement. So we may get a pullback here. We are breaking out of a little consolidation that we're seeing right now the last few days. It's not really exactly a pennant formation, even though it looks like it, because the run here wasn't as directional. There wasn't any volume behind it, but we may just see a further grinding as natural gas is testing lows here. Maybe we catch a little bit of a bid in natural gas, which may help nat gas stocks like, EQT, for example, other ones, ET as well. This is more of a midstream company. It's a limited partnership as well. The gap up, the pullback. Again, maybe we hold here. Look for maybe a close above today's high or the midpoint of the candle from Friday. And we could see a little bit of a bounce out of ET. It was the May 14 trading today, way up here. So again, near-term expectations looking more bullish for natural gas. Antero's in there as well. VTLE, again, it's not a lot of liquidity in there, but Northern Oil Gas, $34 call. So a lot of smoke coming out of the space, particularly oriented towards natural gas. So you might look at that as an area of opportunity. Let's take a look at look at technology. Now, technology is a sector that's much more active and busy, and so as a function, again, it takes a little more time to kind of search through this stuff. But you look at the top result here, Micron. I'm sorting by the percent change in the options price. A lot of 14 April stuff here. You look at the volume relative to the open interest, and so again, we look at Micron. After the big pop on the earnings and then the drop last week, all of a sudden we started to find a little support on Friday and a big jump today. And this is something we're kind of seeing in stocks today, starting to catch a bid. Is there further upside? So again, Micron today, look at the 14 April on the call side, a lot of activity out here, even out to the 67 strike, and 67 has you right here. So again, are we starting to see a breakout of 65 going back for a number of months? Next stop's around 75 if we take this area out. So again, we're seeing some activity that may help create the gamma if we see a move towards 67 and then push it. And we have some near-term potential going to 75 if things start to break out at the 65 level. AMD as well. Again, a lot of stuff here. Big move, high volume. We're forming kind of a flag type formation right now. And are we starting to see the beginning of maybe a breakout from the flag? Certainly today helps. The volume was below average. We start to take this out, and then all of a sudden we're looking at a projected move from high to low here, upwards of maybe 115. So again, a big directional trade. In AMD, again, you can look at the scanning here and you can sort by a bit. AMD, you'll see a lot of 21 April, 102.97. A lot of stuff filtering in here. Again, this is here, but also if we look at the 14 April as well. So a lot of activity kind of coming in, rolling out as the price moves, even like the 100 strike out here for 14 April. Again, that's about where the prior high is. So that's the near term. Start to break out 112, maybe to 118 if things rotate back towards the higher beta area of technology. So a couple of things to watch there. On the financials side, so again, financials are middle of the pack here, and even on the real estate too. But stuff like PayPal today, so PYPL, consolidating at the moment, has not really performed. Are we starting to see the consumer begin to get tapped? Are they starting to pull back on spending? Are we going to start to see, have more difficulty paying cards and that sort of thing? Anyway, so we're seeing this consolidation phase near a support level, but the trade in PayPal today was more negative. So we look at the out here at the 5 May expiration, down here at the 68 strike, maybe some more filtering in the 66 as well. Point being is that we're seeing some downside activity pointing to expectation. We're going to retest, maybe even break support. So watch for that breakout there, but this may be kind of an indication. And the ways you can trade it, look at the vol skew. The volatility is rising out here. You could buy a 72 and sell a 70, buy the 43, sell the 45, or even a higher implied volatility at a lower strike, depending on how much money you're willing to put out there for that option. And again, 72, you could break even pretty quick even at a retest of the 70 lows here on PayPal. It's also hitting Ally today, so ALLY. So again, are the consumers starting to get tapped? Ally's been grinding it out. We're kind of testing an area of resistance right now, maybe broke through on Friday and today. Earnings are upcoming, and so is there potential where the rally leading into the earnings is really raising the bar for Ally to jump over for the earnings to be positive? And again, are some of the indications in late March negative in terms of guidance for the rest of the year? If you're wanting to take that angle, there's support for it, right? But you'll notice here they're announcing on the 19th. If we come to the trade tab here, this is an April expiration. This gets past the earnings and out here at the 24 strike price. So again, you could construct a vertical spread because the vol is rising as you move out of the money. Buy a higher strike, sell a lower strike, target the range you're wanting to get to. But yeah, we could see it retest 22 off of a miss on earnings overnight. And so the possibility of a 24 and 22 here, relatively cheap spread, buy for 70 cents, sell for 35. Again, about a 35-cent cost if you get filled at the mid. But again, looking for, break even 23.65-ish. So point being is that, look, you can quickly break even on a retest of our lows if the earnings come out negative. Low risk, high reward, low probability. Got to throw that out there because it is out of the money. Again, you could construct something closer to the money if you want, even like an in-out type spread where the stock's at 27.30. You could buy the 27, sell the 25, or keep it $1 wide spread too. So there's lots of options here because of the bearish orientation and activity today and the negative vol skew, meaning the put implied volatility is rising as it's going out of the money. Ally. So again, that's Ally, PayPal. Let's look at SLG. SLG today, again, we've had a rally. We're consolidating. Earnings are coming up here. This is, if you look at Green Realty, you go to the Analyze tab here, Fundamentals, you'll see that it is a managed real estate investment trust, largely in New York, Manhattan. So again, this has had some big negative moves. This is just looking for a retest, and it may get here overnight on the earnings, just by virtue of what, realizing negative growth, negative cash flows, et cetera, diminishment to some of the outlook. We're just looking for a retest here, basically giving back the rally that it's already experienced. And in SLG today, it was the April expiration out here, the 2250 strike. So again, 2250, where are you? If we break that, it may create a little gamma squeeze pushing down to 20. It's kind of that near-term expectation for SLG. Also, think about the source of pain that may be coming up for the market more generally. We're going to look at commercial real estate here. Man, I'm going way over time here, but AC, find where I wrote it down. Yeah, ACRE. Commercial real estate, nice breakout today. Looking at about a $7 target, but ACRE a June 750. So again, we're seeing a little more negativity steering towards consumers, towards commercial real estate, and that sort of thing. And if you think about lending getting more impaired, HZO here, HZO at support faded from our high today on higher volume. So we saw some selling come in later in the session, or I think it was early and it stayed. But we got support here, 2668 HZO. This is a May 25. So out here out of the money a little bit. Earnings are coming up. Again, our consumers, is credit creation starting to get stymied here. Again, this is a company that is what? Is a recreational boat and yacht retailer. So again, our lending pulling back, our consumers pulling back. So this is kind of the stuff that may really start to come out in this upcoming earnings. While some may remain relatively more stable, the outlook may be there, some may not. And this is where we're looking probably consumer credit and stuff that people buy with credit. And obviously, if the dollar fades with the bank, with the Fed kind of reversing field, possibly, stuff like Riot. Bitcoin made a nice rally today. Riot was a 14 April $10 strike price. That's moved in the money here. Mara as well. They kind of move in tandem here. 14 April 850. So again, weaker dollar, more speculative interest entering in over the coming week or two, helping to shoot up Bitcoin today. Again, so that's kind of leading where gold's down, Bitcoin's up. More speculative activity rather than dollar weakness creating Bitcoin flows. We'll kind of wrap things up with Target. So Target, made a breakout, consolidation, had a nice bullish candle on Friday, extending that today. I mean, volume's just about average, but we're looking at, the retracement off of this downtrend here. We're about 61. We take out 170-ish, we may retest 180. And today on Target, it was a 14 April 170. So it may create some opportunity at this level if we start to break through, creating some further hedges and driving it towards that 180 target. And it's a little more defensive than maybe some areas in retail out there, Target, and of course, Walmart as well. Anyway, folks, we'll kind of wrap it up with that. We'll catch you back